All right, back here on my channel, Survive and Thrive, I wanted to cover a company that I had previously talked about. This was in August of last year, and that company is Coupang, ticker symbol CPNG, and this is the one that is known as the Amazon of South Korea. Now, at that time, I had the opinion that if the share price of this company got in the $20 to $25 range, that I was going to add a position. I've had a differing opinion since that time as developments have happened with Coupang. And you will later see, I will show where their price per share is, and it is well below that $20 to $25 mark. This first article in Motley Fool, why Coupang fell 18.3%, and this was back during the week of January 15th. What happened? Shares of South Korean e-commerce leader Coupang fell as much as 20% that week before bouncing slightly to finish the week down 18.3%. There wasn't any news out of the company itself that week, so the sell-off likely had to do with macroeconomic factors as investors became worried about inflation and the path of interest rate hikes coming in 2022. So what? On Wednesday, the Consumer Price Index for December was released, which showed inflation rising 7% over the prior year. Excluding food and energy, core CPI came in at a lower 5.5%. JP Morgan Chase CEO Jamie Dimon commented that he thinks the Federal Reserve could hike interest rates more than officials and analysts currently predict. This will result in many more growth stocks falling, and that's exactly what Coupang did. Last quarter, Coupang recorded solid revenue growth of 48%, but its net losses actually increased by an even greater 87% as the company invested in growth. Now what? This bad week came on the heels of a 12.7% decline, so investors may be wondering if they are near a bottom. Currently, Coupang trades at $21.20 as of the writing and posting of this article, down 60% from its IPO price last March. Now that's pretty ugly, but it's also good that Coupang raised money near the top of the growth stock surge early in 2021. After raising $4.6 billion, the company has around $4 billion in cash as of the third quarter and very little debt, but yet still to be profitable. Their current market cap is about $37.4 billion, just a little over 2 times trailing 12-month sales. This also seems like a fairly reasonable price to pay for this e-commerce retailer. As of 2 weeks ago, this article stated it's still very difficult to know if Coupang and other stocks like it are bottoming or if there is still more to go. The company is a leader in South Korea and appears to be executing fairly well. Although net losses increased, Coupang's gross margins improved last quarter as gross profits grew 62%, much faster than revenue. That seems to indicate that Coupang will one day be profitable. However, given its big investments in new offerings such as food delivery and other measures to fend off competitors, it's hard to see when that will happen. So if this is one that you're interested in and you want to invest, then definitely take the time to really understand their overall vision in the years to come. And I think it is going to be a much longer term play in at least the 5 to 7 year range. Investor place, Coupang still needs to prove its worth to investors. The stock is struggling as investor sentiment favors profits over growth. In late July, Coupang stock fell below its IPO price. Last month, shares looked like they would find support at $30. Instead, they sold off sharply with the broader market. Currently, trading just below $19 a share, Coupang stock is down more than 35% so far in 2022. So I do think that we are getting to a point, and it could be in the next few weeks or the next month, that we really see the bottom, but we are getting a lot closer to a very good entry point. The sell-off is not surprising. Investors are frantically reducing positions in companies that are not yet profitable. While third quarter revenue surged 48% to $4.6 billion, Coupang posted a loss of $324 million compared to $173 million a year earlier. Both metrics were worse than analysts were expecting. Coupang has been at it for 12 years though, and investors' patience appears to be wearing thin. The company has yet to turn a profit as it has been investing heavily in its overnight and food delivery services, including building 10 fulfillment centers. Going forward, Chief Executive Officer Kim Baum is likely to face mounting pressure. He will need to weigh the risks of a shareholder exodus against the cost of building the company's food delivery business, Coupang Eats. Coupang has an entrenched core e-commerce business. It launched its Rocket delivery service in March, guaranteeing products would be delivered within 24 hours of purchase. In October 2018, it launched a subscription-based delivery service called Rocket Wow, which offers free next-day delivery and no-cost returns. So in 2019, they entered Coupang Eats with the food delivery space option. As competition heats up in the space, some of Coupang's rivals are looking to branch out into e-commerce by selling flowers and other non-food items throughout their apps. But this is unlikely to phase the country's second largest e-commerce platform as it seeks to capitalize on the growing volume of food delivery to homes. I want to touch on this last part of the article, considering the fair value of Coupang stock. After a sharp haircut, Coupang stock is trading with a price-to-sales ratio of around 2. That's slightly below the PS ratio of Chinese e-commerce giant Alibaba, which is still in the crosshairs of China's Communist Party. Coupang does not have any obvious political risks. Amazon trades at a PS of just over 3. While more expensive than Coupang stock based on this metric, Amazon also has a profitable cloud services division. According to TipRanks, just 3 analysts follow the stock, rating it a moderate buy with an average price target of $35.33, but 2 of them have not posted a report in over 2 months. Market sentiment was different back then. Assuming that Coupang posts a small profit starting in 2024, this would imply a fair value of around $21, or about 11% above the current price. The bottom line, shareholders need to sit tight until Coupang posts its next quarterly earnings report, which is expected next month. Amid tense markets, the CEO must convince investors the company's expansion plans will pay off. Coupang needs to post strong numbers from its e-commerce business lifted by holiday demand. That could stabilize CPNG stock, at least for the short term. So for me personally, I'm going to continue to track this on my watch list and see what happens in their next earnings report. And then depending on where they end up at, I may look to start a decent position. Coupang may be out of favor, but it isn't out for long. So this is a positive catalyst article in the NASDAQ. Investors should be bullish about Coupang stock. While it hasn't rewarded early investors following its massive IPO back in March of 2021, it is growing, and that's what growth companies are expected to do. They're also often expected to post large losses in pursuing that growth. That's particularly true of Coupang. Investor fear around those losses has brought Coupang shares to the $25 range. Some wonder if things will simply continue to get worse. But if you believe they won't, this is a great opportunity. Some sign of control with Coupang stock. The basic argument against Coupang is that it is growing, but at what cost? It really is about continuing losses as much as anything else. This particular writer argues that there's at least one reason to believe Coupang has reached a turning point. They're referring to the relationship between revenue growth and losses. Generally speaking, when a company's revenue growth is outpaced by the growth in its losses, that's a strong negative signal. And indeed, that's what happened to Coupang throughout the first 9 months of 2021. Revenues grew by 38.5% through Q3. Meanwhile, net losses grew by an astounding 199% in the same period. In Q3, that relationship has improved significantly. Q3 was better. Continuing with that idea, revenues grew by 48% in Q3. Meanwhile, net losses increased by 88%. But does it signify improvement? Yes. It appears that Coupang was improving operationally as 2021 grew closer to an end. It suggests, but does not prove, that Coupang reached an operational turning point. Investors should expect the losses to continue at Coupang, but it's fair to also consider watching that relationship between revenue and losses moving forward. The better it gets, the more attractive CPNG stock becomes. There was also an instance June 17th of last year. Coupang suffered a fulfillment center fire that significantly impacted its reported net losses. The company did not know whether or not it would receive any insurance reimbursements for the $296 million loss. So as a result, the FC fire resulted in an increase to their net loss of $296 million for the 9 months ended September 30th, 2021. What that means then is that they can reasonably assume that Coupang's reported net losses of $1.137 billion might actually be $296 million lower. In other words, if the insurance companies do reimburse Coupang fully for the burned down fulfillment center, its losses should be closer to $841 million through Q3. If that is true, then the argument that Coupang is containing its losses becomes better substantiated. In addition to the operational arguments that this article writer is making in favor of Coupang, we should also consider broader factors. For revenue, investors have to consider that Coupang is simply growing. No matter what, that's ultimately important to the company. In Q3, revenues grew by 48%. That represents phenomenal growth, however one slices it. Coupang has been compared with Amazon many times. It's dominant in its home of South Korea as Amazon is in the US. Despite its woes, Coupang is still the leader in South Korea. It's just that the stock price is down. What to do with Coupang stock? So, as I've stated before, make sure that you do enough research to understand the financials, what the company is about, what their future growth plan is, and where you might be able to enter in and find a good way to become profitable in your investment. Growth is growth. Coupang has disappointed investors so far, but it is growing. Share prices have come down, which suggests that it may soon hit an inflection point. Nobody can predict a bottom, but given that Coupang stock trades so low now, it could be very close. Buy now, wait for profitability, and then smile as CPNG stock prices quickly move upward. It may or may not be the next Amazon, but Coupang won't disappoint forever. So that is my mindset. And if nothing else, if I don't stay in it for the long term, I may be looking at taking a position to at least create a decent swing trade, especially with all of the volatility in 2022. To finish out this video, I want to touch on the price today, $18.92. And as we covered in one of the previous articles, there is going to be an earnings report coming next month. Now, we also have to put into perspective that Amazon took 7 full years to become profitable. And with that in mind, and Coupang just coming out with their IPO last year, it could still be a number of years before they find that profitability. And so a long-term play is probably the better spot to put yourself in to be able to really find the most substantial gains from your investment. It would be great to hear what other investors think about Coupang in the YouTube community, and being able to share this company or other options out there that are similar that will give us all a platform or place to consider investments in 2022. I'm continuing to build on my YouTube community. I really want to get to that 1,000 subscriber mark and be able to have opportunities for further outreach and ways to help others on their path to financial freedom. Definitely hit that like button if you've gotten value out of this video. Share it with others to be able to spread the word and help out that algorithm search. And let's look for ways to be able to take advantage of the volatility in 2022. Make it a great week, and don't just survive, thrive!